Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys like and subscribe. And as always, make sure you check out my website, daytradingfearless.com, where you can follow along with my S&P Emini future trade zone support and resistance, and also my stock and option portfolio at patreon.com/daytradingfearless. But as always, let's jump right into it. So today we're going to talk about options. What exactly is an option? Okay, we know what stocks are, right? Stock is share of a company, right? You can either buy or sell shares of a company. And options is just a derivative of that. So let's jump into a little presentation that I kind of did for this video. So in today's video, we're going to talk about what exactly is an option. So an option is a contract between two people where one person is long an option, who would be the buyer, or one person who is short an option, who would be the seller, right? And the other person is taking the other side of the trade. When you buy a call or put option, you have the right to buy or short the stock at a specific price in the future at the option's expiration. Now, to kind of keep that simple is think of it as you and I are going to make a sports bet. Okay, you want Tampa Bay to win the football game. I want the Denver Broncos to win the football game. Well, we're two people. We are the market. We're on opposite sides of the market, right? You actually want one team to win. I want the other. And at the end of the game, more than likely, one team is going to win versus the other. There will be a winner and there will be a loser. So I hope that kind of makes sense. When you sell short a call or a put option, you have the obligation to buy or sell the puts or short the stock, sell a call, right? At a specific price in the future at the option's expiration. One option contract equals 100 shares of the underlying stock. Remember, options are a derivative of the stock, right? So what this is telling you is when you're a seller of options, you are obligated to either buy or short those shares, right? When you are a buyer, you have the right to. Big difference. Okay, that's probably one of the biggest things that people get kind of mixed up on is the obligation versus the right. Right? It's kind of like if I'm a buyer and XYZ stock is at $100 and I buy the 105 calls, I have the right to buy that stock at 105 plus the premium that I paid, which might be $1, so my break even would be 106, but I have the right to buy it. So if it's at $120 tomorrow, I have the right to buy that stock at $105 minus my premium that I paid for it. So let's move on. An example would be if you go long one XYZ call at $20 per share, then you have the right to buy 100 shares of that stock at expiration $20, right? Now, you will pay a premium of $1 to have the right to buy that stock at $20. You will need the stock to move higher by $1 to just break even at options expiration. Now, if I put that trade on today and there's 30 days left in expiration and it moves up $1 tomorrow, chances are what I paid $1 for is probably going to be worth about $1.50, we'll say, okay, give or take, if we're right at the money. So I have, because there's still a lot of time decay left in there. So that's but remember, If at expiration, then my break even would be $20 plus $1, which would be 21. But if it happens tomorrow and I still have all this time left, then I actually gain more. I gain the value of the option in the meantime. Now, if the stock is trading at $30 at options expiration, then the option you bought for $1 is now worth $10 and you have made a profit of $9. You also have the right, remember, you're the buyer, so you have the right to exercise the $20 calls and now be long 100 shares of stock at a cost basis of $20. But the stock is currently trading at $30, okay? So in a nutshell, the stock had a massive move up, okay? Your break even is 21, but we're now at 30, okay? So you have $9 worth of true value in the stock, right? So not a bad trade for the money that you kind of make. So you would have made a profit of $900 so far on the trade, and you would currently be long 100 shares of the stock. With options, you could buy and sell them anytime before the expiration. So in this scenario, let's say the stock goes from $20 to $30, right? And what you paid $1 for is now worth $9 or $10 minus your dollar premium, right? You've made $900. You can either let that keep going, or you could exercise your right and say, I want 100 shares of the stock, okay? And give me 100 shares and you would realize a $900 plus profit. Or you could just sell the option, walk away with your money and call it a day. So that's kind of what an option really is. Now, just a FYI, whenever you see or hear $1 in options, that usually is equivalent to $100. Okay, so let's do this. Let's go back over here, okay, to our option chain, and let's take a look at Viacom, right? If we go and look, okay, 21, that's the day of the month, May. The 21 is the year. How many days are left? Okay. And then it's equivalent to 100 shares. Well, currently the stock is at $40.85. That's where it closed. Well, if I want to buy the $42 calls, well, we're out of the money, right? Because we still need the stock to move $1.15 before we get there. So this is what the premium of the trade actually would be. Okay. And so we could buy this, and all we would do is add the $42. Okay. Take 42, add the 230. Okay, which would give us $44.30. And that would be what our break even is at expiration. But remember, we still have 30 days. If we actually bought this call right now, when we're at 40 and 85, right? Well, what this would do is if we had a $1.15 move, we would make about $55 to $60 on this trade. Now, how did I come up with that number? You're going to have to keep watching these videos because I will go over what the deltas are, the Greeks, all these other things. So, but that's it for this video. That's what an option is, right? You have the right to buy a call or a put, but if you're a seller, you have the obligation to actually buy those stocks. Okay, so and we'll get into the different risk profiles throughout these videos. But as always, thank you for watching. If you guys have any questions, leave comments down below, and we will talk to you soon. Thank you.